Are you waiting to buy a home because you think you need a 20% down payment? Have you been told that saving up tens of thousands of dollars is the only way to get your foot in the door of homeownership? Folks, that is a lie. It is an old, tired myth that has been holding people back from building wealth and achieving their dreams for far too long. Today, we are going to tear down that myth. We are going to give you the truth. You will get the clear, direct answers you need to stop waiting and start moving. This is not some complicated financial seminar. This is real talk for real people who want to win with their money and with their lives. Listen up. The idea that you absolutely must have 20% saved is one of the most damaging pieces of financial advice floating around out there. It causes good, hard-working people to sit on the sidelines, paying someone else's mortgage through rent for years longer than necessary. It creates a sense of hopelessness. It makes a worthy goal feel completely out of reach, but it does not have to be that way. The truth is, there are multiple paths to buying a home. The 20% rule is just one of them, and for many people, it is not even the smartest one. We are going to break down the real numbers and the real strategies that people are using every single day to buy homes. The journey to owning your own home is not a sprint. It is a marathon that requires a plan, but a good plan is based on facts, not fear. For too long, the conversation around down payments has been dominated by fear and misinformation. People hear 20% and they immediately shut down. They do the math on a $300,000 house and see a $60,000 hurdle that feels impossible to clear. So they give up before they even start. They resign themselves to renting forever, never building the equity and the security that comes with owning their own property. That stops today. It is time to replace that fear with facts and that hopelessness with a clear, actionable plan. This essay is your roadmap. We are going to cut through all the noise and the nonsense. We will explain exactly what a down payment is and why it matters to a lender. We will show you the different types of loans and the actual real-world down payment percentages they require. We will talk about how you can use gifts and assistance programs to reach your goal even faster, and we will give you practical, no-fluff tips to supercharge your savings. By the time you are done reading this, you will be empowered. Let's get right to it. What is a down payment? Think of it like this. It is your stake in the game. It is the portion of the home's purchase price that you pay up front, in cash, out of your own pocket. If you are buying a house for $250,000 and you put down $25,000, your down payment is 10%. The bank or the mortgage lender then loans you the remaining 90%, which is $225,000. It is that simple. It is not some mysterious fee the bank pockets. It is your money going directly toward the value of your house. It is the first chunk of equity you own from day one. It is your investment in your own future. So, why does the bank care so much about you having the skin in the game? It is all about risk. A mortgage is a massive loan, and the lender wants to be sure they are making a wise investment in you. When you put your own hard-earned money on the line, it sends a powerful message. It tells the lender that you are serious. It shows that you are financially responsible and have the discipline to save. Most importantly, it demonstrates that you are personally invested in the property and financially invested. You are far less likely to walk away from your mortgage payments when your own savings are tied up in the home. A down payment acts as a buffer for the lender. Imagine the housing market takes a temporary dip and the value of your home drops slightly. If you have made a down payment, your own equity absorbs that initial loss, not the bank's. This makes the loan far less risky for them. Because of this reduced risk, a larger down payment can often get you better terms on your loan. Lenders may reward you with a lower interest rate, which can save you tens of thousands of dollars over the life of the loan. A larger down payment can also help you avoid certain fees, making your path to ownership smoother and more affordable. Now, let's be clear. While a larger down payment is good, the goal is not to be house rich and cash poor. You should never, ever drain your entire savings account to make a down payment. That is just plain foolish. You absolutely must keep a fully funded emergency fund of 3 to 6 months of expenses set aside in a separate account. This is non-negotiable. So, if 20% is not the only way, what are the actual numbers? How much do you really need to save? The answer depends entirely on the type of mortgage you get. You have options, folks. Let's look at the most common loan types so you can see the truth for yourself. Forget the myths you have heard from your broke brother-in-law. Here are the facts. A conventional loan, not backed by the government, can have a minimum down payment as low as 3 to 5%. 3%. The catch: put down less than 20% and you'll likely pay private mortgage insurance, PMI. We will talk about PMI later. Next, government-backed loans designed to make homeownership more accessible. FHA loan insured by the Federal Housing Administration. Down payment possible at 3.5%. Game changer for millions. 2 more programs for specific groups. Military veterans, active duty service members, eligible surviving spouses. VA loans, often 0% down, absolutely nothing. One of the best programs. Don't live in a big city? USDA loan might be for you. Backed by the U.S. Department of Agriculture, for eligible rural and suburban buyers. If you meet income rules, 0% down. That is another path to homeownership with no down payment at all. So 0%, 3%, 3.5%, 5%. The 20% myth is outdated. Know your options. Build a realistic plan. But wait, there's more. Down payment money doesn't have to be all you. Most loans allow gift funds from a close family member. Parents, grandparents can help with rules. You'll need a formal gift letter proving it's a true gift, not a repayable loan. Thousands of down payment assistance programs exist nationwide. These are grants, low-interest second loans, offered by state governments, local governments, to help cover costs. You have to research, but help is out there. Section 4. Winning the savings game. Your practical playbook. Knowing your options is great, but you still have to save the money. This is where the rubber meets the road. Your discipline and your intensity determine how quickly you reach your goal. Wishing for a house will not make it happen. You need a plan. Execute it with passion. Get on a written, monthly budget. Every single dollar needs a name. Control your money. Tell it where to go. This is the foundation of financial success. Once you have a budget, get aggressive. Open a separate savings account called House Fund. Naming your goal makes it real. Set up automatic transfers every payday. Do not wait to see what's left over. Pay yourself first. This is a non-negotiable bill to your future self. Cut expenses with surgical intensity. Cancel subscriptions. Stop eating out. Find free ways to have fun. Say no so you can say yes to a house later. Throw every extra dollar at the house fund. Tax refund, house fund, work bonus, house fund. Sell on Facebook Marketplace. House fund. Side hustle. Deliver pizzas. Side hustle. Drive for rideshare. All that income goes to the house fund. Live below your means and pile up cash. Get gazelle intense. Be so focused people think you've lost your mind. Build momentum. Every dollar saved gets you closer. Track progress. Celebrate the small wins. First 1,000 saved. Watch the balance grow. It fuels you. You're not just saving money. You're buying freedom. You're investing in memories for your family. You're building a legacy. Connect daily sacrifices to that vision. This is how you win the savings game. Section 5. Busting the myths and taking control. Fear and confusion are the enemies of progress. When it comes to buying a house, there is a lot of both. So let's be crystal clear and bust the most common myths that hold people back. Short, direct statements. No fluff. Just the truth. The first and biggest myth. I absolutely need a 20% down payment. That is false. As we have covered, many buyers get into homes with 0%, 3%, 3.5%, 5%. The 20% figure is a goal, not a requirement. It helps you avoid PMI, but you can always work to get rid of PMI later. Here is another one. I have to drain all my savings to buy a house. That is not just false, it is dangerous. You must always maintain your emergency fund of 3 to 6 months of expenses. Your down payment is a separate savings goal. Buying a house without a financial safety net is like walking a tightrope with no net. One gust of wind, one unexpected job loss, one unexpected medical bill, and you are in a crisis. A down payment gets you the house, but an emergency fund helps you keep the house when life happens. Do not ever compromise on your emergency fund. Down payment assistance programs are scams or too hard to get. That is false. Be careful and work with reputable lenders and agencies. These programs are very real. They are funded by government entities to help people become homeowners. Yes, there is paperwork. Yes, there are requirements. Is it worth a few hours of work to get thousands in a grant or low-interest loan? Absolutely. Do not let a little paperwork stand between you and your dream home. Talk to a trusted mortgage professional who can guide you to legitimate programs in your area. The final myth is a mindset issue. I'll never be able to afford a house. That is a victim mentality. Victims do not win. You get to decide. You can look at the price of homes and feel defeated, or you can look at your own income and your own budget and make a plan. Millions of regular, hard-working people buy homes every year. They are not all doctors and lawyers. They are teachers. They are mechanics. They are office workers who decided to get intentional with their money. They made a budget. They lived on less than they made. They saved with intensity. You can do it too. You are in control of your financial destiny. A down payment is not a barrier designed to keep you out of the housing market. It is a tool that benefits both you and the lender. It lowers your risk. It lowers the bank's risk. It can lead to a more affordable mortgage. The key is to understand your options. Create a realistic savings plan. Execute that plan with unwavering focus. Stop listening to the myths. Stop waiting for the perfect time. Talk to a mortgage pro. Get your plan on paper. Start saving today. Homeownership is not a distant dream. It is an achievable goal waiting for you to take action. Down payments aren't meant to stop you. They're meant to position you. The key isn't having the most money, it's understanding the system. If you want to know what your real number looks like, talk to a professional and build a plan. Homeownership isn't about perfection, it's about preparation.